Hey everybody, Gary with Basecamp Trading. Let's take a look at a little hack that you can use on monthly options expiration. You can go into your options chain, and what you're looking for is you're looking for the strike price that would cause the most puts to expire worthless and the most calls to expire worthless. So you're looking at open interest and volume, and you're looking for which strike price has the highest number of open interest and volume on the call side and on the put side. And whichever strike price that would cause the most puts to expire worthless and the most calls to expire worthless, that's a price that it's reasonable to expect price to ultimately end up closing near, because your market makers and institutions are your primary sellers of options. So when they sell puts and when they sell calls, they want as many of those to expire worthless as possible so that they can keep as much premium as possible. And you can see on the SPX today, the price that actually would end up causing about the most pain would have been right here at 41.80, and the SPX actually closed between there. It ended up closing between 41.80 and 41.85. So you can see on the call side, this 13,987 calls and above all expire worthless. Now on the put side, you can see this 6,800 and below all expire worthless. And this ended up kind of finishing right in between them. So some of these were still in the money, but not fully in the money. None of these were, and none of these were. So on the SPX, that was an area that you were looking for it to ultimately finish. And you can see that's the area that it did finish. This doesn't always finish to the penny or the dollar or whatever, but it'll get you close. And so that'll kind of give you a hint early in the day of where this could potentially end up closing, and you can make some plays based on that. Here, let's look at the SPY today. And you can see on the SPY right here, 160,000 calls, 271,000. So you can see that from here and above would cause a high number of calls to expire worthless. And then over on this side, you see you have 154,000 puts, 185, not much above that. So right in here, this 417 and below would be a good spot that would cause the most puts to expire worthless. And over on the call side, this 416 and above would be the best place for this to ultimately expire worthless. And you see the SPY ended up closing between 416 and 417. Let's take a look at Apple. Apple. Okay, looking at Apple, let's see, you got a high number of puts right here at 46,000 and below. And over here on the call side, you have 133,000 and above. So looking at Apple, you can see that anywhere between 133.75 and 134 would be a really good place for Apple to expire. That would cause the most calls to expire worthless and the most puts to expire worthless. And you remember, even if it closes right on 134, these all still expire worthless. And you can see that's about where Apple pinned. Apple ended up pinning right around 134. So again, causing 45,000 or 46,501 and below all to expire worthless, and causing 133,950 and above all expiring worthless. And again, you can see that's pretty close to where Apple ended up pinning. Let's take a look at, let's say, Google. See what Google looked like. Okay, Google didn't have a lot of calls and puts. It's not a real active option stock just because the options are so expensive. But again, you can see 2,900 and above all expire worthless, and this 800 and below all expire worthless. So again, this just kind of gives you an idea, and it's just a little hack that you can use to get an idea of where a stock or an index may end up finishing near for the day. Here's the QQQs. You see we closed right here, so this 38,000 and above all expire worthless. This 51,000 and below all expire worthless. And again, these are absolute perfect pins, but you can see that price ended up finishing in an area where it would cause the most pain for the buyers of the puts and the buyers of the calls, and closed in an area that allows the market makers to keep the most premium, because again, the more options that expire worthless on both sides, the more premium that the market makers get to keep. So again, just a little hack you can take a look at on option expiration.